Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 13, 2022. Let's take a look at Ford Motors. Ford Motors is a leader in the automaker, and as you can see here, stock is down 26% from 52-week high. It's in a correction territory and market cap is around 61 billion, so it's a big market cap company. And Ford is trying to electrify its fleet so that they have new cars all electrified. And their Ford F-150 is one of the top selling truck here. It has got a lot of demand. Off late with a semiconductor shortage, Ford has come down along with the other automakers. Let's see if it's a great time to accumulate Ford Motors. So with that, let's jump in. Look, from a leadership perspective, we got Jim Farley at the top, 1,301 ratings, a lot of ratings, and the employees approve the CEO. That's a very good rating here, 89%. So the leadership checks out. Jim Farley is doing the right job here. He's really electrifying the fleet and taking Ford to the next level. So with that, let's go into some more details. Look, they got the trucks and they have a lot of accessories. That's where they make big money here, with all these gears and accessories. And they're introducing and making sure they got all the new technology. And they are working with Alexa here, Alexa built in, as you can see here. And they got Ford F-150 Lightning here. It's one of the top selling truck here. A lot of people love 150 Lightning, and demand is going through the roof here. They don't have any demand side issues. The issues on the supply side with the semiconductor shortage. I think it's going to be short, lived, and they can have all the chips that they want as the chip makers gear up. That can really help Ford to go into the next level, and stock can appreciate nicely. All right, so from a background perspective, Ford, as many of you know, they design, manufacture, service the cars and sports utility vehicles. It's the top manufacturers of cars. And look, stock price is around $15. It's a very low price, and they're down big time from 52-week high. It's squarely in the correction territory right now. And if you look at the stock chart here, they did very well back in 2020. Look, nice uptrend in 2020. And now with all the inflation fears, supply chain shortage, stock has come down nicely from 52-week high, down about 26%, as you can see here. Look, there is a very good support level right here. They came through the support level and they got one more nice support level right here around $14. I think it may touch $14, but at these levels here at $15, it's a steal here. I would be buying this company and accumulating at these levels here. It's a good price point. This company can bounce back nicely from these levels. Look, they came down. Good bounce back, came down, bounced back. This company is really doing well. It's not the old Ford where they used to lose money everywhere, but now with the Jim Farley's leadership, they're going into the market where they can make money. If they cannot make money, they exit the market, which is the right strategy. So with that, look, right now stock is in a hold pattern from analyst recommendation. We got 5 buy and 6 hold. Some of these analysts have downgraded off late, which is that's why stock has come down. But at these levels, because we already have a few downgrades from the analysts, I think stock is going to slowly go higher. Yesterday, despite of market coming down, Ford managed to go higher, so that's why it's trying to bounce here. I think it's got some legs. Look, we got a US car recession. That's it's already in a recession. We have issues on the supply side. That's what is biting into Ford. And looks like Tesla is getting some big reservations, as you can see here. And oil prices rise. That's going to cause folks to buy these cars. I think that's where the electric cars will help. I think electric truck F-150 can do very well. So with that, overall I see a nice looking company, but having challenge on the supply side when it comes to semiconductor. That's why stock is having some near-term trouble. Long-term, Jim Farley is going to take this company to the next level of new heights. So with that, let's jump in here. Look, from a price target perspective, Stock is about $15 as you can see here. The higher target is around $32. It's more than double the current price. Lower target is $13. You don't have too much downside risk here. I think $14 could be the nice support level like we talked about earlier, but I think they got a lot of upside from here. That's why I'm accumulating this stock and holding it for a while. From a rating perspective, look, we got a sell rating, from the technical perspective here, but from the fundamental perspective, from an analyst rating perspective, it's a buy. So that's why I like these divergences. Technical says sell, but fundamental says buy, and stock is bouncing around. That's why you start accumulating. All right, so now let's look at the competitive landscape. From a competitive landscape perspective, we got the top dog here, Tesla, as you can see here. It's the biggest market cap, nice looking market cap here. They got it's $1 trillion company as you see here. I think they got a lot of leg up in the electrification of the vehicles. And then we got Toyota Motors, Toyota here. Toyota is number 2 here, 230 billion market cap, and looks like free cash flow is negative for Toyota right now. Number 3 is Ford here with the $61 billion market cap. Look, they got very good overall rating score here, 86. A company's got $49 billion of cash in the balance sheet. They don't need to worry. And $9.5 billion free cash flow. And it's a net margin positive company, 13% net margin, much better than Toyota or Ford or some other companies here. I think that's why it's a good company to start accumulating here. Long-term debt to equity is a little bit high, but they have enough money to cover the short-term obligations here with nice current ratio of 1.2, which is well over 1. And as you scan through here, I also like Ferrari. Ferrari is also trying to electrify its fleet here. They've been doing great from a performance perspective. You could load up on Ferrari also on the down days. Looks like right now Ferrari is up already. And we got a few more here which are sold off big time here. Look, Lucid. It used to be touted as a Tesla killer. It's down big time here with the very low rating here, very low score of 2 here. If you're a quant trader, you could load up on some Lucid, but understand there is no fundamentals. Company is losing money. Look at the net margin here, losing big money. And they do have some cash here, about $6 billion, but fundamentals are not there yet. And we got a few more here, Chinese car makers, as many of you know here. We got Li, XPEV, and so on and so forth. Looks like both Li and XPEV have money. At these levels, Li could be better than XPEV, given they got nice cash, $7 billion, and more importantly, they got free cash flow positive. That's a good sign here. And then you got Indian company Tata Motors. You could buy this one also here. Look, they got about $1 billion free cash flow, which is very good. And they got about $8 billion cash. They have Jaguar, Land Rover, and a bunch of other brands. I think it's a good one to buy. Right now, as you see here, RSI is 46. You could slowly accumulate. Understand net margin negative still. Company not making money, but this can have a good upside. And we got one more right here. Workhorse company is not there yet. Look, right now it's just a negative revenue as you see here, but there's no fundamentals. You could buy and hold for a while if you can take some short-term pain. All right, so with that, let's jump in here. Look at Ford. Look, Ford Motors, ticker symbol F, letter F, and $15 stock, as you can see here. Nice $61 billion market cap. That's a good one here. And they have revenue per employee around $745. That's a respectable number. Stock has been dropping off year to date, 26% down. It's in a correction territory. Analysts recommend buy now, which is good. And look, looks like they're down big time. Year to date performance is 26%, but down 40% from 52-week high. That's why I think it's a good one to buy at these levels. It always manages to bounce back. It's into S&P 500, S&P 100, multiple of these memberships here. All right, from a sales perspective, look, respectable $136 billion sales. That's a good number, and their sales is growing in a quarterly basis, and on a yearly basis, that's a good number here. and 5-year sales growth is negative at this point, which is understandable in the electric vehicle market, but they've done well in the quarter-over-quarter and yearly basis. That tells you recently they're improving. Importantly, sales growth for this year and next year is higher. That tells you analyst outlook for this stock is good. That's a good story here. And from a valuation perspective, look, low valuation, PE ratio is 3.46. It's as we call it, it's a growth at a reasonable price here, low valuation. And look, right now it's a EPS positive. Company has got positive earnings and nice EPS growth this year as well as EPS growth for next year and next 5 years. That tells you outlook from an analyst perspective is positive on this stock here. From a financial perspective, a little bit high debt. Expect high debt in the auto market. It's a capital intensive business here, but quick ratio is good here and current ratio is good. They can meet their short-term obligations and they have a lot of working capital, don't need to worry, and free cash flow positive like we talked about. And look, companies also paying a nice dividend here, 2.6% dividend. From a performance perspective, look, it's a negative in a 5-day perspective and 10-day and even 1 month and 3 month, but they're turning the corner. Look at the 1-day performance here. It's a positive 1-day performance. All right, now let's look at the technicals. From a technical perspective, RSI or relative strength index, it's a 39. That tells you it's completely oversold here. It's a good time to slowly start buying. Volatility is high, as you see here. It's a 49. So that tells you could make some money selling put options way under the current stock price. And stock bounces around 67 cents on an average. So you could make some money trading in and out. Given there's a nice 49 million shares traded, it's very liquid that way. And look, there is nothing much going on from an insider perspective. Insiders are buying slowly. That's a good sign here. They have confidence in their own stock here. Institutions own a big chunk of this Ford stock. And look, right now it's in the Bollinger Band perspective, in a 50-period Bollinger Band, 50-day Bollinger Band. It's just above the lower band here, just 15% above. That tells you it's trying to bounce back here. Same story, Bollinger Band 20 day, it's 16% above the lower band here. It's trying to bounce from the lower band. You know, from a 1 month high and low perspective, look, it's 1 month low is 14.56. Stock is just above that. That tells you it's got legs. 1 month low could be a nice support level. From a VWAP perspective, stock wants to go slightly higher. Look, VWAP 1 day and 20 day is higher than the current stock price. That also provides a nice level. It tells you stock can go higher from these levels here. From a industry benchmark perspective, these guys get a nice 97 score evaluation, super low valuation here, nice 73 growth here. That's also good. Profitability score is also good. Financials, it's a little weak, but it's okay. You know, it's a automaker, capital intensive. I like score 1.8 and above. It's 1.1, but that's okay. Ford is known to have a little bit higher debt. And as we look through here, they're doing better compared to industry when it comes to two-year performance. And 5-year performance perspective, they're negative at this time, mainly because stock has fallen down here. Overall rating, as you see here, is 86. They're doing well from a margin perspective. Nice 97 score from an efficiency perspective. And their maximum drawdown is 41% in 1 year. They already have a 40% off from 52-week high. They're close to their max drawdown. That's why you can slowly accumulate here. Earnings is coming up in 428, which is around the corner. That's why volatility is high at these levels here. I think, you know, it's a good company. Analysts are bullish. Right now, there's some temporary weakness here. You could take advantage and buy some Ford up here. All right, from a numbers perspective, look, Ford is trying to, it has a nice earnings per share as you see here. It turned from negative to positive. That's a good level here. I hope they can keep up this earning momentum here. From a sales perspective, it was doing well back in earlier on. It dipped a little bit in 2020. Now it's trying to go higher. We'll see if they can keep this momentum, but companies are making money and they have earnings. That's a good one here. Shares outstanding is constant. This company is not diluting the share count. That's a good one here. And from an operating margin perspective, they're trying to go higher as you can see here. It's a pretty flat clip here, and net margin positive. They did very well back in 2020. Let's see if they continue the momentum. And debt to equity, they're trying to reduce their debt load as you see here. That's always a good indication. I love companies reducing their debt load. From a numbers perspective, I love the top line to improve as you can see here, and bottom line they're taking care of it. That's a very good story. All right, so from a analyst, from an earning perspective, I always pay close attention to earnings history. Look, this company is hit and miss. They have stringed together a couple of very good quarters as you see here. They did very good here from an EPS perspective, earnings per share perspective, positive surprise. And last time they did a negative surprise. That's why this did a number on the stock. Stock came down big time at these levels. If they can surprise on the higher side, which is a possibility, stock can go higher. And look, from a revenue perspective, this company is clearly struggling. As you can see here, it was a $37 billion revenue back in 2017. Now it's $35 billion revenue. So that's why a company is trying to electrify. It requires some additional investments. Now the chip shortage, that's why a company is struggling. But this company bounces up and down nicely. Look, it was 37 billion back in 2017, became 31 billion during COVID days, and it even became 16 billion, bounced back nicely. That's why I feel this company can bounce back from these levels here. And from a revenue growth perspective here, look, they got positive and negative. They managed to be on the positive side back in December 2021 when they announced. I think this is a good one here. This is one of those stocks, you should buy it when it's down like this. It bounces up and down nicely. That's why the timing is good now. You could buy and accumulate. This may not be the one for your retirement portfolio, but it's a good one for swing trading. And look, from a revenue perspective, sometimes they hit, sometimes they miss, but mostly they hit, as you can see here. That's why this whole big miss here from a revenue perspective, that's why stock came down after this quarterly earnings, which typically happens a month after the date here. Typically it came up probably in January timeframe. That's why stock is down last month or so. All right, now let's look at the Ford's performance matrix here. From a performance perspective, look, 2022 is not kind for Ford here. It's down, as you can see here, 42%. I think at these levels, the stock can go higher. Look, stock was down back in 2021, bounced back nicely. It was again down back in 2020. Look, bounced back nicely. Now it's continuously down for a couple of months. That's why it's a good swing trading opportunity here. And look, big recession year, big inflation year, 2018. Stock came down 39%, and look what's going on now. It's already down 42%. At these levels, you could slowly buy this stock. Most of the bad news is baked in. There could be some more bad news, but at these levels, I'm comfortable putting some of my money and accumulating, and take some short-term pain and hold it for a while for a nice appreciation. All right, now let's look at the chart. From a chart perspective, look, Ford has a banner year back in 2020. Look at the performance here. Now it's giving back, as you can see here. There's a nice support level. It came down, broke the support level, and there's one more nice support level right here. It did not hit it. It went higher. So that's why I think it's a good one to buy at these levels. Around 14.5 or 15 could be a good support level for this company. It's trying to bounce off of those levels here. It's a weekly 5-year chart, a little bit longer term. So let's look at short-term chart here. From a short-term chart perspective, look, we got a 1-year chart here. As you see here, that's a good support level right here, right here. So you could try to see if company is trying to bounce, use this as a resistance level here and trying to go higher at these levels. I think it's a good one to slowly start accumulating. Look, it's trying to bounce off of around 14.50 or something. It's a good one to slowly start buying. Look, momentum is improving right now. There is a nice uptick in RSI, and volatility is picking up, mainly given earnings is coming up. And look, on the balance volume is going higher, and smart money is flowing into the stock. As investors like us, retail investors, are worrying the big money is going into the stock. They have seen this many times. It's a very good swing trading opportunity. That's why smart money is flowing into the stock right now. All right, now let's look at Bollinger Band here. From a Bollinger Band perspective, look, we are just bouncing off of the lower Bollinger Band here. Look, nice uptick here. The lower Bollinger Band can be a good support level for this stock. It can take on the middle one and then go higher. And right now, as you see here, volatility is increasing. That's mainly because earnings is coming, and on the balance volume is pretty steady. There is some nice green candles here. So with that, I think from a technical perspective, even though stock is down, look, it came down after the last quarterly earnings where it missed. Now it's trying to get it grew back. This quarterly earnings somewhere around April timeframe, later half of April, the stock can bounce nicely and can go higher. All right, now from an option chain perspective, in the option market, look, stock price is around $15 here. At $15, we got very healthy option contracts traded. And as you go into the higher levels, look, at 22 strike price, we got 32,000 contracts traded here, open interest. Even at 25, we got 32,000 contracts. That tells you in the option market, folks are betting Ford will go higher. They're buying out of money call options. And in the put side of the house, there is some open interest here, but it's nowhere close to call side open interest. Call side, look, very, very healthy open interest here. That's why in the option market, folks are betting the stock will go higher. All right, now let's look at the option statistics here. Total calls traded 137,000, total puts traded 83,000. Handily call number is much more, and that makes the put call ratio around 0.6, which is a bullish sign here. That tells you there are more call options than put options. That's why it's a bullish in the options market. So with that, you might wonder, what should I do now? Look, Ford is having some tough time. It's down from 52-week high very nicely. And on the positive side, look, they have some agreement here for the lithium supply from Lake Resources. That's a major bold bet by Ford, because this whole lithium is a very important factor when it comes to electrification. Company is committed to electrify the fleet. You can understand that by this deal here. And look, there is a global supply chain crunch, semiconductor shortage. That's causing some issue to Ford's bottom line here. They don't have a demand issue, it's a supply issue here. And Ford is really electrifying. It's not the old Ford where it goes and loses money everywhere. Now they're electrifying. They understand they got to change. They're changing it. Jim Farley is the right leader to turn the company around and make it an electric company, starting with F-150 truck. And it got a ding due to the downgrade here. At this time, it's the right time. If you're a little bit longer term trader, you could buy some Ford stock here, take some short term pain, accumulate, and you can make some good money. So I say, take advantage of this short term downturn here, especially because analysts downgraded, and buy this pullback and accumulate. You will do very well. All right, thank you very much. Happy investing and trading. Please subscribe.